Donald Trump's proposed 200% tariff on European alcoholic beverages has sent shockwaves through global markets. If this tariff is implemented, it could drastically alter trade relations between the US and the EU, shake up the alcohol industry, and leave American consumers paying significantly higher prices for their favorite European wines, champagnes, and spirits. But how did we get here? And what does this mean for the future of trade between the two economic giants? This video will take you through the origins of the U.S. EU trade dispute, the specific impact of the 200% tariff, the reaction from businesses and governments, and the potential long-term consequences. By the end, you'll have a full understanding of why this issue matters and what it means for you. The US and EU have a complex economic relationship. As two of the world's largest trading partners, their economies are deeply intertwined. However, trade disputes between them are nothing new. Steel and aluminum tariffs. Trump previously imposed tariffs on steel and aluminum imports from the EU, citing national security concerns. The EU retaliated by placing tariffs on American products, including bourbon whiskey, motorcycles, and certain agricultural goods. Airbus versus Boeing conflict. Both the US and EU have accused each other of unfairly subsidizing their respective aerospace giants, Airbus and Boeing, leading to retaliatory tariffs on various products, including European wine and spirits. Digital services. Tax dispute. The EU has proposed new taxes on American tech giants like Google, Amazon, and Apple, further adding to trade tensions. The latest conflict over alcohol tariffs is just another chapter in this ongoing battle. However, a 200% tariff is an extreme measure that could have far-reaching consequences beyond past disputes. Trump's proposed 200% tariff is being justified on the grounds of unfair EU trade practices and the need to protect American businesses. According to Trump, European nations have long benefited from favorable trade agreements while placing restrictions on American exports. If this tariff goes into effect, it would mean a $20 bottle of French wine could now cost 60 plazers in the US. Many European alcohol brands could disappear from American shelves due to pricing. Massive financial losses for European alcohol producers, particularly in France, Italy, and Spain. A major shift in consumer preferences towards American-made wines and spirits. This move has been met with strong opposition from both European leaders and American importers and retailers, who fear the impact on the alcohol industry and consumer prices. The European alcohol industry is a multi-billion-dollar sector that heavily relies on exports to the United States. In 2023 alone, the EU exported over $13 billion worth of alcoholic beverages to the US biggest affected country's companies, France. Known for its wines, champagnes, and cognacs, France would be hit the hardest. Companies like LVMH, which owns Moet Chandon, Hennessy, and Dom Pérignon, could face billions in losses. Italy. Home to world-famous wines like Chianti and Prosecco, Italian wineries could see a sharp decline in US sales. Spain. Spain's booming wine industry, including brands like Rioja and Cava, would struggle to compete in the American market. Projected revenue losses. Economists estimate that a 200% tariff could result in billions of euros in lost revenue, with small wineries and distilleries hit the hardest. This could lead to job losses and financial instability in Europe's alcohol sector. European leaders have not taken this lightly. The European Commission has already vowed to retaliate, and potential countermeasures could include tariffs on American whiskey, bourbon, and other spirits, higher tariffs on US motorcycles, tech products, and agricultural goods. Legal action through the World Trade Organization, WTO. The fear is that this could escalate into a full-blown trade war, damaging both economies and weakening diplomatic ties. The effects of a 200% tariff wouldn't just be felt by big corporations, they would also impact everyday consumers and markets. American consumers. Prices of European wines and spirits would skyrocket, leading many to switch to domestic brands. Retailers, importers. Businesses that rely on European alcohol sales would struggle to adapt to the sudden price hike. Stock markets. European beverage and luxury goods stocks could suffer, while American spirits companies might temporarily gain an advantage. The best-case scenario would be a negotiated compromise between the US and EU, preventing the tariff from being enforced. History has shown that trade disputes often end with diplomatic agreements. Extended trade war. If both sides refuse to back down, we could see a prolonged tariff battle, with retaliatory measures leading to higher prices and economic instability. Another possibility is that some tariffs get reduced or delayed, but trade tensions continue to simmer in the background. Given Trump's unpredictability in trade policies, it's difficult to predict which way this will go. This 200% tariff threat is more than just a fight over wine and whiskey. It's a major test of US-EU relations. If these tariffs go into effect, they could significantly increase consumer prices in the US, cause billions in losses for European alcohol producers, lead to further retaliation, escalating into a full-scale trade war. At the end of the day, the big question remains. Will the US and EU find common ground? Or is this just the beginning of an economic conflict that could reshape global trade?